أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. How are you all? Good, alhamdulillah. Very good. So we are going to do a little bit more of chapter 12, inshallah. Thank you for asking, Sharat. I'm doing fine, alhamdulillah. So we're going to do a little bit more of chapter 12, and we are going to finish, inshallah, by next Tuesday. And we'll also have the quiz. And if we finish by next Tuesday and we have the quiz on chapter 11 on Tuesday, next Thursday, we might just take it easy and not have a class. So let's see how it goes. And all these classes also are not going to be full length because we are ahead of schedule, alhamdulillah. So we'll take it easy a little bit. And I know you're tired from the midterm and so forth. It's the same thing, accrual and payroll liability. You know, if you can say salaries payable or accrued salaries, right? They mean the same thing. Okay. Okay, so the next thing we have is to look at the segregation of duties that our client is supposed to ensure. And we have here the first thing, which is initiation of wages and salaries. This is done by the department the employee is working at. So this is called the operating department. It could be the finance department, the production, the marketing, whichever department the employee is working at. The initiation of the wages and salary is done in that department. And also the initiation of the employee hiring and firing is done at the department as well. So if somebody is going to be hired, the department would know that need before anybody else. And if somebody is not performing well and they need to be fired, also that information is known by the department where the employee is working. So that's the operating department, and they start that process. Then the approval of the salary and changes goes to the human resources. So initiation is done by the department where the employee is working, the operating department. Then it goes to the human resources for approval. Once it's approved, the updating of personnel records and the updating of payroll records are also done at the human resources department. So now what we have here is a master file for every employee and payroll records which have to be changed for the change in salary, change in position, etc., etc. This is done by the human resources department. Then approval of timesheets and job classification is done by the operating department. So the department where the employees working would know how many hours they have worked, what is their timesheet showing, and what type of job they have done, in which particular product they may have worked on, or which branch they worked at, etc., etc. All of that is done in the prepared and put in the timesheet by the operating department. Then it goes to the timekeeping department for review. So this time data, the timesheet data, goes to the timekeeping department, and before the payroll is prepared, it is reviewed and they make sure that everything is correct. There is no unreasonable amounts. There are no unreasonable amounts. There are no unreasonable items in there. So they look at it. And then it goes to the payroll department for preparation. The payroll department obviously uses a software. The IT is involved. Now remember, when we say IT, there are accountants working in the IT department as well, okay? But they are more, you know, AIS type accountants. They are more aware of the technology, and they're more experts. They're experts on the softwares, the enterprise resource planning software, etc., etc. Now, all accountants in the company usually work in the enterprise resource planning software, but some accountants are more expert and they work with the IT. So the preparation of the payroll is done by the payroll department, and then once the preparation, which is the calculation of the payroll, is done, the actual checks are prepared and signed, and this is done by IT. Okay, this could be physical checks, it could also be electronic transfers, right? And the distribution of paychecks or the distribution of actual transfers are done by the treasurer. Now remember, treasurer, the position of the treasurer, any money going out of the company, right? The treasurer would be involved, right? The treasurer would be involved. Now you see how many different departments are involved here. So if any one of these departments want to do fraud, or any one of these departments make a mistake, then someone else will catch it, right? Then the updating of general ledger for payroll, right, is done by the IT department, which is obviously, you can understand, accountants are involved here. And then the once the payroll is prepared, the payroll is compared with the budget, and this is done by the operating department. So the operating department, let's say we're supposed to have $10,000 for payroll this month, and it is 15,000. So they have to see why is that, what's going on, why is that, is there too much overtime, or were there actually more work done by the employees, etc., etc. And then the calculation and recording of payroll taxes again is done by the payroll department. Okay. Now, this segregation of duties, you have to do two things. First, you have to understand, and then you have to remember. It is possible that you may not understand the logic behind every single one of these steps and can remember logically. So you have to remember, you have to memorize if you cannot understand it logically, and then the understanding will come to you as you go through the substantive procedures and other things. It will come to you why these steps are there and why the segregations are there. So you have to know them, right? So the answer to Jasim's question is yes, you do have to know them. Okay, you have to know them in order for you to see whether the client has good controls or not. If they do not have these segregations, if the same person is approving and signing and doing all of these things, that means there is a possibility of inaccuracy, there is a possibility of fraud. All right, does that answer your question, Jasim? Okay, so this is done. Now the work of the client side is done. Now we come in as auditors and we start our audit. The first thing we do is we look at the inherent risks. The first 2 points are somewhat overlapping, and that is economic conditions on payroll costs and supply of skilled labors. Now, sometimes the economic conditions drive how much you have to pay the employees or how little you can pay them and get away with it, right? So the economic conditions drive the payroll cost, and you have to know what the economic conditions are. Maybe it's difficult for you to get the labor from overseas, or maybe there aren't enough people, skilled labor in your sector, the client sector, or there are too many, so the client can pay less. So all of these things are there. Okay, all of these things are conditions that drive the payroll cost and make it more or less risky for the clients to get skilled labors. Number three, turnover. Turnover is how often do the employees change in the company. So if old employees leave and new employees come, and that happens on a regular basis, the new employees come and the old employees leave, that is called turnover. And if it happens often, that means that you always have new employees at the client's offices, and you do not have a lot of experienced people. And you will notice that this is the case for every business, because it takes time for a new employee to adjust to the company, and it takes time for the company to adjust to the employees. Just imagine, if you had a new group of professors coming every semester, it would be more difficult for you than you take a class with the professor and you repeat another class with the professor. It makes lives easier for you, right? It is easier to repeat a course, uh, or take another course with the same professor rather, than taking new professors who never, nobody has taken classes with them before. Is that not true? Do you not find that to be the case? Don't you feel more comfortable taking a class with someone you have taken a class with before? So this is the case with all businesses, where if an existing employee has been with the company for a long time, it makes things better for the company as well as for the employee. So it's a risk if you continuously have new accountants coming before they learn, another set of company accountants come. So there is always a high risk of them not doing the job properly. Number four, existing contracts. There may be some contracts between the company and the employees that were entered into during a good economic time, and if the economic conditions are not as good as before, the contracts have to be honored. So the company might have to pay those salaries that were high and so forth, but the company may not have enough money to honor those contracts. So this is a risk for the company. And then you have regulations, the government regulations. And the government regulations may dictate that you must pay the employees a certain amount of salary, and you must pay them a certain amount of benefits. You must have certain safety measures at the working uh, venues. So those things make life sometimes more difficult for the client, and it makes it more expensive. So you have to know that these things are risky as well. So, and all of this knowledge comes by you being knowledgeable about the client's business, right? And all of this information can be found in the newspapers and the magazines the industry subscribes to. So I told you, when I was working as an accountant, we used to read the magazines and journals the restaurant owners subscribe to, so that we can be up to date on what they're doing. Number six, inherent risks associated with officers are considered high due to their high positions. That means that the officers are the CEO, CFO, VPs. The actions that the CFOs and the CEOs and the VPs that take, or the contracts they have with the company, are more significant than the lower level employees. So if the CEO makes a statement in a newspaper or a TV interview that makes a more bigger difference than if just a simple employee were to say something about the company. This is inherently risky when these people take an action, because their actions are taken seriously. So this again uh, adds to the inherent risk of the client. Are you following? Is this clear? Right. Point number four, existing contracts are contracts that you have entered with the employees, and you may have given employees contracts that are uh, for high salaries, benefits, etc., and they may have been entered into a time of economic boom. And if those existing contracts are there and the economic times are not as good, then you might have difficulty, the client might have difficulty honoring those contracts. Are you following? Does that make sense? Right? So in that case, you might fire some of the people, or if the employees are agreeable, then you might have to reduce their salary and benefits, and usually it causes a downward morale of the employees. Employees do not feel well when that happens. And it happened to many companies during the COVID-19 lockdown. Okay. Okay. Now we come into test of controls. The first thing we need to test is occurrence, which is everything that is recorded is valid, they happen. The auditor's concern is payment to valid employees for work done. So we want to make sure that everybody who got paid are existing employees, and we are paying them for the work they have actually done. So we want to make sure that nobody's getting paid and that person was fired, and nobody's getting paid for hours or shifts that they did not work. How do we ensure that? What do we look for in the client's controls? We want to see the segregation of duties. So again, here, Jasim, you have to know how the duties should be segregated so that when you observe the segregation, you know that this is a good segregation of duties, right? You know that this will catch any errors and it will prevent or minimize frauds, right? And you inquire of the controls to ensure payment to valid employees and process of termination. You ask them, how is the process of making the payment, who approves, who reviews, etc., and the client will tell you this is how it is. The employees who work on the payroll processing will tell you, and then you ask them the process of termination. When you fire somebody, you ask them, when you fire somebody, what is the process, who starts the process, who approves it, what are the final steps, what does the employee sign, how do you make the last payment to the employee, how is the payroll department notified that this employee is leaving the company. So all of these things are part of the control. So if those are there, then you can have some assurance that the controls are observed. Okay. The next management authorization, management assertion we are concerned about is authorization. And we want to make sure that there are no unauthorized increase in salary, and we want to make sure that there are no unauthorized payments. So we want to make sure that every salary that was increased was authorized properly, and every payment that was made was authorized properly. What do we test? We test presence of controls for the following. Number one, hiring and firing. So we want to ask the client, or we want to go around and observe the process of hiring an employee and process of firing an employee, and we want to see if there is a control, who starts the process, who reviews the process, how is the interview done, etc., etc. So we might be able to see one of these things in action if they're doing one when we are there, or if they're not, then we can ask them, we can ask people how the process works, right, of hiring and firing. And we want to make notes and compare our notes with what should be done. We also want to know the process of setting pay rates and benefits. So when the salary is fixed for a new employee, or the salary is increased for an existing employee, or the benefits are those things that are paid in addition to the salary, for example, airline tickets or tuition fees for children's school. All of these things we want to know, how is it approved, how is it reviewed, etc., etc. And then the payment, monthly payment or any bonus payment or any payment made to the employees, how is it initiated, how is it authorized, who's involved, how many steps does it go through. So we want to make sure that all of these things are properly authorized. If the client has a good process, good set of controls of authorization, then we feel well about their authorization process. All right. And next is accuracy. We want to make sure that the gross and the net payments are calculated accurately. Now, the gross payment is the total amount the employee is going to get paid. The net payment is after the deductions. So deductions include, remember, taxes, pension payments, any other deduction that the employee authorizes. All of those are reduced from the net salary, and then I'm sorry, gross salary, and the net salary is calculated. And there may be a number of different types of calculations. Remember the worksheet I showed you of an employee in our last class where they had the income and then different types of income taxes and different types of deductions. So all of those things are calculated every month for every employee, and you can understand there could be mistakes if they're not done properly. So we want to observe the process and approval of calculating gross and net payments. So there is a payroll department in every big company, and you can come to the payroll department and you can ask, what is the process of calculating? What is the process of calculating the net payment and the calculation of the gross payment? Okay, and they will give you details of how the calculation is done. Now, let me see if I can find. I was trying to look for an email I received from the payroll department at Qatar University explaining to me a particular calculation. And um, the calculation, the explanation of their calculation uh, gave me a good idea that they have good controls in calculating the deductions and so forth. Anyhow, I cannot find it right now. If I find it later, I will show it to you. You ask them, how is this particular thing calculated? Who calculates it? How is the percentage used, etc., for calculating a particular thing? And if you feel good that they have a good process of doing the calculation, that means their accuracy would be high. Okay. And then the last one is a classification where the auditors concerned about proper classification of different items. And here you want to observe and inquire about the classification of direct and indirect labor, inventory, and cost of goods sold. Now, these are different categories of expenses where the payroll cost goes. But even within the direct labor or indirect labor, you might have multiple different classifications. Let me show you here the financial statement that we looked at the other day. Let's take a look at the payroll section. Okay, you see the cost of labor, right? Do you see in the middle of the page, cost of labor? Are you able to see it? Okay, so inside the cost of labor, you see hourly driver, hourly inside, hourly management, overtime driver, overtime inside, overtime management, salary management, vacation wages, contract labors. All of these are different categories of labor costs that the client is recording expenses in, right? So all of these accounts where the expenses are recorded. And it's very simple, very easy to record it into the wrong account, and it would make your classification of these items inaccurate. Okay? It will make them inaccurate, so the classification would be incorrect. And we want to ask them, how do you classify these things? When you're classifying them, what process do you go through? And if they tell you that we have chart of accounts that everybody has, and everyone who's making an entry to each account makes sure that the account name and account number is accurately used. And if they tell you things such as this, then you know that they have a good process of classifying the cost. Okay, so far so good. You're following? Any questions on the test of controls? Okay, now we'll stop here, inshallah, and we'll continue discussing chapter 12 again on Sunday. I want to give you a question to see your understanding of the entire audit process, and it's a multiple choice question. Answer the question, and then we'll discuss your answer. Take a couple of minutes, think carefully, read carefully, and answer the question, and then we'll go through your answer. Go through the explanation. Here's the question, and I'm going to put out the answer for you to answer the question, the option to answer the question. Okay, so take a couple of minutes and answer this question. Okay, so we have one student who answered B, one student who answered C, one student who answered D. The answer is B. Um, that is, remember, you have to sample before you do the test of controls, and you have to sample before you do the substantive procedures, right? Remember our checking of the two checks, signatures in the two signatures in the checks. That is test of controls, and you have to sample before doing that. And then once you do the test of controls, now understand, not every single thing that you do in the test of controls is subject to sampling. For example, inquiry, observation, walkthroughs, those are not done through sampling. But certain things done in the test of controls are done through through sampling. And then the substantive analytical procedure comes before the substantive procedure, and before you do the substantive procedure you also have to sample. So the answer, right answer, is B. Is that clear? Those who did not answer B, are you convinced the B is the right answer? Okay. All right. So we'll stop here, inshallah. We'll take it easy since we're a little bit ahead of schedule. Do you have any questions for me? All right. If not, I will see you again on Sunday, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.